Okay, traders, your market outlook for the day. It is Thursday, 9/11/2014, and we're going to walk through a couple of these markets. Yesterday, we looked at the crude oil market as we took out this 91.84 handle. We rallied back into it, so those of you that may have been able to participate in those trades, again, this was later in the afternoon. We got back into the DSR level here at 91.90. Retested right here, again, late afternoon session in the Globex session just after the close of the pit traded session. Rolled back over, retested 91.32s. This DSR level gave way and gone pecan. Yesterday I did the analysis saying if we take out structure support here, then we should make an immediate move to 91.21s right here. We did that. We tested the 91.21s, gave a rally back into previous structure support right here, anticipated resistance right here, and right there we got our turning point black tip sell signal, retested the 91.20. So again, if you did get that, we talked about risking 20 or 30 to make 60, and then the balance new structure lows. These lows right here came right in at the 1618 fib extension from our analysis yesterday. Remember what we did, because this leg right here was still being built, we instead inverted. We took the swing high that preceded this move down. We looked left to a static swing low right here, and we used the value of that leg right there to project. So the fib projection, fib extensions, 91.21 nailed, retracement, bear continuation pattern. This is a lower high in that bear continuation pattern. We then retest the previous structure lows, either hold or they don't. Here they held 27, back to 48, so just enough for an 18-tick target before they rolled over and blew down to new structure lows. Again, 21 held, 46 held, and now obviously we'd look for a lower high. Any rally back into this 26 to 91.36 area, we'd look for qualified sell signals, anticipating that this market would continue the sell-off. Now we have a really nice static swing. So first I'm going to start with the swing high that preceded the drive to this new structure low. And you'll note I've got a point of confluence. The 618 Fibonacci retracement of this last leg down comes right into play at previous structure support, which is now anticipated resistance. The DSR support, green outline, anticipated resistance, red interior. So we broke below and closed below. That's when this thing changes color. So again, if we were to rally back into this zone, then we'd look for the short entry. Now let's take the value of this last retracement that we saw from here to here. Let's drop it in right here. You'll note that that comes in at around 17. So this would be a 1-to-1 measured move. Comes in about 10 to 15 cents shy of this. If we did see that, then let's take the value of X to A leg and say, what if it rallied back to this area and then duplicated itself? That would drop us into a 1414 Fibonacci extension. That's the retracement grid, so we'll come in with our extension. So again, if the market rallies back to this price point and then sells off, then what would be an expected profit target? So I'm measuring this X to A leg, 127, 1618 fib extension. Now we'll take this guy and we'll pull in our 1414, which is right here. And you'll see that 1414 shows confluence right with that ABCD termination. Now again, this part right here is static. This is still dynamic. The market could use this swing high, roll over from here. The market could rally back all the way to the 91.38s or even 40s, then roll over. Okay, so this is just a prediction based on previous market structure and directional market movement. Crude oil. All right, let's go take a look. S&P 500. We talked about a repair or protection trade for 9/11. I bought the 164 puts. Rod put those on yesterday. I'm sorry, 165 spider puts. S&P is rolled over. I'm sorry, 195. The There we go. Yeah, so we'll go through that in just a bit. Market's rolled over and is going to gap lower, so we'll see what impact that has right off the open. Did you talk about that yesterday, Bud, as you close it down? Okay, so we talked a little bit yesterday, gang, about a protection trade, and that is it. So we did get that out yesterday. Rod will talk about it a little more. We're likely to gap lower today, 23 minutes until the open. You see the S&P 500 has rolled over off those swing highs. We did get a pop yesterday in the S&P after we closed the room down. My Nasdaq trade came back, hit 2 profit targets, got stopped out on the balance on the NASI, and then we had this big pop for the morning session. Okay, so we'll take a look right here. Let's roll it back over. You see that we've rolled over. We've got structure relevance down here again at the 1982.83 handle. We talked about that yesterday. The rally right here terminated with a symmetrical double top. We rolled over to a new structure low followed by the lower high. Where does that lower high exist? Look left. Support, support, support. Once broken, becomes resistance right here. And the DSR level, again, was green, just like this guy at the bottom. So that's a valid DSR support level. And once it gave way, price breaks below, closes below. Again, internal goes green or red, anticipating resistance. Now, again, this was early morning this morning. Okay, so S&P lower. We've got points of interest down here. If the S&P comes back in, fills a gap, and then rolls over, and the market rolls down to this 1982 on the futures contract, we might look to cover part of those spider puts. All right, let's go NQ0914, and we've got roll dates for some of these future contracts as well. All right, so this guy right here, we broke down. Beautiful bid zone down here against the 4056. So again, DST traders, we took advantage of this one time yesterday in the live room, got a nice winner, but 3 good qualified trade signals off of that support zone. And again, gang, I want to show you right here, this is a great opportunity to just discuss structure. So what do markets look like when they change direction? So note right there, symmetrical double bottom at DSR support. Double, triple bottom at DSR support. We've got to buy these levels. You got to make sure you've got your qualified signals. DST traders, you're at SOS 3, 4s, and 5s down here. Okay, so yesterday we bottom, we took 5, stopped on the balance, bottom, took 5, and then here we rally. So this is where we see that impulse move to a new structure high. Okay, so grab this, stay in draw mode, and you got to get the kinesthetic going where you are literally walking through these trades. If I left click here, I force myself to draw these levels in. From that new structure high, we anticipate the higher low, which comes in right here. That's an approximate 23% retracement of the value of this impulse move. We then pull back down. We retest that level right here. This produces a symmetrical double top. I promise you, I'll bet you $10,000 that an RSI is overbought here, bearish divergence here. Don't believe it? Let's go look. So we're looking for a point of confluence. Gang, the RSI that we typically use is either 7-1 or 5-1. So I'm going to throw in the 5x1 relative strength index. Overbought at 79, oversold at 21. That way when we see 80s and 20s real time, it's available there on the chart. So we're taking a visual price pattern, a symmetrical double top, combining it with another indicator. And this is an oscillator. It oscillates between 100s and zeros. So when this guy goes extreme overbought on the left side, I'm looking for price to retest this extreme high. And when it does, I'm looking to read relative strength. When the relative strength of this move is less than it was over here, my assumption is that buying pressure is drying up, and that gives us the opportunity for a potential sell signal. So this right here is a classic SOS3 sell. Now, I don't have a DSR level here. I don't have structure, so this is more aggressive. One of two things is going to happen. A, the market rolls back over and it breaks below the swing point. The swing point is the swing low that exists between double tops. It's the swing high that exists between these double bottoms. When we break below, close below, as we've done here, what does that produce? That's another impulse leg. So from this swing high, we've made a new structure low. We clearly have broken below and closed below this guy right here. Now, every charting package has got a swing indicator or a zigzag indicator. So come down here and remove the discretion. How do we do that? We remove the discretion by employing technical indicators. So if I set my swing strength, let's just go down to 5, it's going to identify my swing highs and swing lows for me. So you'll note right there is the swing low. In order to qualify as a swing low, I have to have 5 higher lows to the left, 5 higher lows to the right. So again, a new trader who literally walked into this room on Tuesday, 3 days ago, I asked them a simple question. See this black support level right here? And in fact, we could go one step further and we could say identify swing lows in red. So we simply say, did price close below the red dotted line or hashed line? And right here, the answer is absolutely yes. So if that happens, then we define this as a new structure low. What's the expectation? We expect now that the market could put in a lower high. So the 2618 trade takes the Fibonacci retracement. We go from the swing high on the signal leg down to the new structure low right here. And then I would sell them at the 618 retracement. So we'd look for the short entry here. From the entry, protective stops are here above the current double top. Profit target 1 is a retest of the current swing lows of the signal leg. Right here is the signal leg. And then target 2 is typically either the 127 extension or the 1618. In this case, we'd likely hold until a potential retest of this massive DSR level down here. Okay, so oversold, lower high, bullish divergence, further bullish divergence, new structure high, higher low, new structure high, higher low, retest of the high, bearish divergence on the right side, pull back, new structure low, anticipated lower high, retest of the low, new structure low. How do markets move? What do they look like when they turn? So we'll talk about turning points. We'll employ the internal strength indicator, but that's a great visual right there. Now let's remove all of the drawing tools. We look at pure price, and basically we've got 2 primary indicators that we're focused on. Our DSR levels. If we're buyers down here, we're clearly buying counter to the underlying trend. If we're selling over here on the right side, we're clearly selling counter to the trend. What makes this buy signal different than this sell signal? Well, we've got the same indicator set up. I've got an extreme oversold condition here. Price makes a lower low right here with bullish divergence. So I'm losing the strength behind the sell-off. Relative strength gives me that visual. Price happens to be at a massive DSR level. Look left, I've got structure relevance. So now I'm going to bid this market up. I'm going to buy this market at levels where previously the market has shown me that buyers come in. I don't care why they've come in. I don't care why they're defending the 40-52 position. That thought doesn't enter my mind. The only question is, do I have an oversold bullish divergent symmetrical double bottom at a DSR level? If yes, then buy. Okay? So again, this is classic. Oversold is SOS1. Bullish divergence, SOS2. At a DSR level is SOS3. Add in this symmetrical double bottom, that's SOS4. So cumulatively, we're adding together the strength of all of those different qualified trading signals. They're all technical indicators. Visual price patterns, RSI, the DSR levels, these are dynamic. It's not what I hope will happen. It's not what I think might happen. It's technicals. Okay? So we'll look at how we've put this together into trading software that helps identify those. So right now, the Nasdaq is in no man's land. If I look left right here and ask, why did it stop at 40.75? Well, swing high resistance, 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 resistance. Once broken, anticipated support. I don't have a DSR level here, so if I decided to buy this with an SOS3, it would be aggressive. If the market rallies back to here, I want to be a seller at 40.94.5s with a qualified signal. If the market continues south and comes back to here, I'm looking to be a buyer with a qualified signal. Regular trade, more conservative. Regular trade, more conservative. Look left, I've got structure right here, but no DSR level, a little bit more aggressive. All right, TF 0914. TF 0914, fat finger. Again, gang, look at the DSR levels. They start to build. Very, very simple. They're resistance until they're not, and then we look for them to become support. Did the Russell rally back into previous structure relevance? Resistance once, twice, 3 times a lady. Right here, overbought? Yes. If RSI is overbought, then SOS1. Where's the market relative to? Are we at a DSR level? No, we're not, so it's going to be more aggressive. Look left, are we at structure? Yes, we are, SOS2. Did we retest that level? Yes, we did. With bearish divergence? Yes, we did. See the RSI right here? We have a lower high on relative strength. There's not as much buying pressure as we rally into this. Did the market pull back? Yes, it did. Did it break the previous swing low right here? Yes, it did. This is a new structure low. So if we pull back down to this 52.53 handle, we'll be looking for long entries. And again, gang, when you're looking at this, when you trade this on the 60-minute chart or the 1,000 tick chart, as this market's rallying into this DSR resistance zone, okay, forget time of day for right now. This is where we buy IWM puts for those of you that trade stocks. We buy the put anticipating this rollover. Right here is where we buy IWM puts. As it pulls down and gives us this buy signal at these DSR support zones, we're buying the calls. We anticipate the futures market will rally, and then we expect that the ETF will do the same. Okay, so 1158 was relevant. Look to the right. You see we broke below, traded below, closed below. So now we're looking at that 52.53 handle in the mini Russell. Dow Jones. Dow's into this handle. So the other day, again, we talked about if we take out Dow 17,000, 16,970 is going to be key. 16,970 holding support here over the recent week. So we've tested the 970s. We put in a double bottom at the 970s on the 1,000 tick. This will be easier to spot on a 500 tick. We'll have more bars of data. From those swing lows, we rallied back up into the DSR. Sell them here. Buy the diamond puts. Sell them here. Buy the diamond puts. Yesterday, we bought the SPY puts based on a qualified technical signal in the futures market. Markets rolled back over. We go overbought, higher low, bearish divergence. Again, what do markets look like when they turn? Or what we call end of move, EOM. What was the move here? It was a rally. It was a bullish move until overbought, higher low, bearish divergence at a DSR level, rolls back over. In the mini Russell, Tuesday, Wednesday, over $4 in profits, trading every turn with my cluster trader. And again, the cluster trader is a fantastic trading strategy, but I want you to understand that the conditions for that system have been perfect. We should be kicking tail in these conditions because the market is just oscillating. Look at the DSR levels crushing it. So when markets are sideways, a counter trend type of strategy like the DSR should absolutely kill it. So we make money when conditions are favorable for that strategy, and then we give back less than we made when conditions aren't favorable, or we just don't trade. How do we avoid trading during those periods? What do we look to do? A, we look to filter those out by trying to identify, hey, we're trending now. There's momentum behind this market, right? Or, again, we just give back less. So the equity curve might look like this. New equity highs, drawdown. New equity highs, new equity highs, drawdown. New equity highs. This will be a period where the conditions are favorable for the strategy. This will be a period where conditions are not favorable. If I'm a trend trader, when the market's trending, I should be making new equity highs. If I have a momentum strategy, my level 3 trading system, perfect example. Finally seeing some directional movements. The euro came out of its slumber. We hope that it remains that way, but the euro's pulled down into 9 and 10-year lows in volatility. So on that momentum trend following strategy during that period, it struggled. We'll have one up month where we make money and then give it all back the next month. Then make money the next month, then give it all back the next month. And now finally we put together 7 weeks of some directional movement. Again, the market conditions now are more favorable for that type of trading strategy. Okay? All right, gang. So here, let's get ready to roll. Let's take a look at a couple of stocks. Rod, why don't you hop in here? And then a reminder there. Yeah, Carlos just reminded it's the December contract now, gang, across the board.